Canada's Foreign Affairs Minister will travel to China in a matter of weeks in a move that could signal an easing of tensions between the two countries, locked in a diplomatic standoff.
The relationship between Canada and China appears to be on the mend after years of strain and a more recent escalation in trade tensions.
Those discussions will deepen. I will expect at the appropriate time to be meeting with President Xi Jinping.
It began with a murmur, not a press release, not a post on X, not even a rumor, just a discreet note that crossed the Pacific and settled on a sleek desk in Ottawa. Sent from Beijing, marked confidential, it carried a proposal so audacious it seemed almost surreal. China's ambassador laid out what insiders are calling the Golden Deal, a total elimination of tariffs on Canadian agriculture, every single one. In return, Canada would lift its 100% import ban on Chinese electric vehicles. No phased negotiations, no drawn-out agreements, just a straightforward swap. One decision could unlock nearly $5 billion installed Canadian exports within weeks. To some, it's a lifeline. To others, a snare. For years, Western Canada's farmlands have been strangled by trade barriers. Canola fields, once glowing golden under the prairie sky, now languish half-harvested. Grain silos overflow with crops no one's buying. The hum of processing plants has faded to a tense hush. A market that once sustained entire communities from Saskatchewan to Manitoba has been locked out since early 2025. Then came this offer, a single thread from Beijing that could transform those silent fields into engines of recovery overnight. Like and subscribe to stay updated on this unfolding trade saga. But beneath the trade balances and shipping schedules looms a deeper question. Is this a deal or a test of Canada's loyalty within the North American bloc? Ottawa's alignment with Washington is no secret. When Trump returned to power, Canada followed suit, slapping a 100% tariff on Chinese EVs under pressure to stand united with the U.S. The move wasn't about shielding Canadian factories, it was about solidarity, a display of cohesion within North America's trade fortress. But the cost was swift. Beijing retaliated with punishing duties. 75.8% on raw canola, 100% on oil and meal, plus extra hits on pork and seafood. The blow landed hard. Shipments stalled, warehouses swelled, and farmers begged for relief to keep their operations afloat. Now, China offers a simple fix. Drop your EV tariff, and we'll drop ours. A mirrored proposition, a pointed challenge. In the prairies, the reaction is raw and urgent. Manitoba and Saskatchewan's premiers are pleading with Ottawa to seize the deal. Let us sell again, they urge. Let us survive. For rural towns, this isn't just policy, it's existence. A reopened Chinese market could send canola trains rolling east again, reviving supply chains, recharging local economies, and restoring the pulse of trade-dependent life. Economists project that lifting China's tariffs could inject billions back into Canada's western provinces. Yet for every call to act, a warning rises. What happens if accepting Beijing's terms fractures Canada's alignment with the U.S.? What if this deal unravels the hard-won integration of NAFTA and now USMCA? On Parliament Hill, the debate rages. Some see the offer as a rare chance for Canada to assert its own interests, free from Washington's shadow. Others call it coercion, a ploy to exploit Canada's east-west divide. Farms versus factories. One senior official, speaking off the record, put it starkly. This isn't about canola or cars. It's about who calls the shots. The story traces back a year. When Trump imposed sweeping 100% tariffs on Chinese EVs, claiming to protect American industry from a flood of cheap, high-tech vehicles, Canada mirrored the move almost instantly. But Washington offered no reciprocity. Instead, Trump's administration pushed new restrictions on Canadian exports, even threatening penalties on auto parts if Ottawa didn't comply. For many Canadians, it felt like a familiar trap. policy dictated from someone else's capital. Beijing's response was surgical. Its commerce ministry targeted Canadian canola, pork, and seafood, products rooted far from Toronto or Montreal, yet now pawns in a global chess game. Prairie farmers became collateral in a fight they didn't pick. Now, Beijing's Golden Deal turns that fight into an ultimatum. Accept, and the sanctions vanish. Refuse, and the world's second-largest market stays closed. For Western premiers, the math is clear. China once bought nearly a quarter of Canada's canola exports, sustaining thousands of families and entire rural economies. One agreement could reopen that flow. But in Ottawa, geopolitics muddies clarity. In Ottawa, a silent tug-of-war unfolds. Western premiers argue the EV tariff is killing livelihoods and must go. Ontario's industrialists, unions, and lobbyists warn that lifting it could flood markets with Chinese EVs, cheaper, cleaner, and more advanced than North American models. Prime Minister Carney stands at the crossroads, knowing his choice could shape not just his legacy, but Canada's global stance for decades. Ontario's Doug Ford has been blunt, calling any move to lift the EV tariff economic suicide, warning that Chinese automakers like BYD and Geely are ready to swamp Canadian showrooms with low-cost electric vehicles. The auto industry, centered in Windsor, Oshawa, and Oakville, hangs in the balance.